the last point that he added about public-private blockchain bridging, where you sort of take a snapshot from a private blockchain and then try to save a copy of it in the public blockchain so that you always have something to vet against. Again, a very legit point, and you see a lot of people actually exploring this space, especially even some of the companies who are exploring permission solutions. So this is one solution where we at BTM have explored. So coming to the last session for today, it's a panel discussion. The topic of presentation is the role of blockchain in payment modernization. I'd like to introduce the moderator, Mr. Dharmesh Desai. Mr. Dharmesh Desai is Senior Vice President and NRI Digital Strategy and Strategic Alliances of IIFL Holdings. He'll introduce his fellow panel members.
Thank you very much for the introductions. Good afternoon, everybody. We are privileged to have a panel here with experts in both payments and technology, and I'll quickly introduce them here. So I have Ella with me. Ella is the Director of Partnership at Stellar. Ella supports Stellar Network, and she interacts with the financial services entities, the banks, the MTOs, about payments using blockchain technology. Sai, please come. Sai is a Vice President at JP Morgan Chase. Sai runs the blockchain initiatives at JP Morgan Chase. He's based out of Singapore. And the third panelist is Sagar. Sagar represents Ripple. Sagar manages the government and the regulatory relationship with all the regulators in APAC and Middle East for Ripple. So this is the panel we have today. The topic we would discuss here is and since they are experts in payments here, the topic here to discuss is the role of blockchain in payments modernization. Before we start on with the panel discussion, I'll quickly share a few numbers with all of you, just to give you an idea how big is the opportunity, what is the market size we are speaking here, and then probably we can move on the panel discussion. So as per the WTO data, global cross-border payments, which is money moving from country to country, both institutional and retail, is approximately $24 trillion US dollars. This is the 2017 data, so $24 trillion of money moves from different countries using across multiple platforms, banks, MTOs. $22 trillion out of this is trade or the commercial payments. $2 trillion would constitute to retail peer-to-peer payments. So that is the overall larger market we are speaking here. Also, as per an Accenture report, this $24 trillion is expected to go to $30 trillion by 2022. So in the next 4 years, we will see a growth from $24 trillion to $30 trillion. The money which is to be made here, or which the financial institutions, or the MTOs or the players who play in this market, the intermediaries, they currently make around $70 billion US dollars on fees and FX margins. So that is the money which has been made here. Very interestingly, Accenture has predicted the money they will continue to make despite the growth from $22 trillion to $30 trillion would again be at the same level of $70 billion. At max, they can only go up to $75 billion, and this is all because of the disruption in technology which is coming in. So while the volumes would grow up, the money which is to be made by all the institutions here would remain flat or stagnant. Also, before we also move on to the panelists, and I'll take their views, from a customer's point of view, what are the key problems today which an individual is facing today or a company is facing today while making these payments? And I'll quickly run through a few of the problem statements here. Some of you are part of the industry and you will be able to relate with that. The key challenge here on a cross-border payment is costs. Costs and the cost for sending a remittance today from one country to another, a cross-border remittance for an individual or for a corporate would range anywhere between 50 bips to 7%. Now this depends on the mode of remittance you are using, if you send money through wire, through bank transfer, and it also typically would depend on the currency or the corridor through which you are sending money. So payments which have a USD on one side would typically be far cheaper to send, but payments on the exotic currency will be far more costlier. Certain corridors are known for charging higher. So this is the key problem area today in the payment system, where the cost ranges from between 0.5% to 7%, and which is a sizable margin. The second problem area which I could think of is the unpredictable timing. More so because you have money moving in from different countries, so different countries follow different time zones, there are different holidays. You're sending money from a US to a China or a Middle East, and the weekends are different in these countries. So there is no predictability, honestly, for a person who is sending money, that the money would be reached to the last guy in what point of time. So again, in terms of time, there are payments which can actually be sent on the same day, and it can even take as long as 7 days for the payment to reach. So that's the second problem statement which I could identify in this business. The third is the lack of transparency. So when the money is flowing from one person to another, one institution to another institution, typically there is no real-time tracking which the payment sender or the recipient has to know where the payment is lying today, and that is a big problem today. So if somebody wants to actually check if the payment has been sent yesterday, where is it lying today, very few institutions would be able to actually pinpoint and tell him where is the payment lying today. So that's probably the third area. Second is nobody is actually sure of the fees or the money which would be deducted before it reaches the last mile or the last recipient on the last end. So there are a lot of intermediaries which are in between, and everybody will chip in with their charges and fees, and the money which will actually reach the recipient may be much different than what we were taught. So these are the typical problem statements or the challenges in the existing payment infrastructure. I'll just start on with the discussion here with my colleagues here. Sai, you represent JPMC here. As a bank, I think JPMC is one of the only few banks which has a dedicated team looking at blockchain initiatives. You run that from Singapore. What are your views on blockchain?
Thanks, Dharmesh. Yeah, first of all, thanks for this opportunity. I would like to thank BFA Forum, and it feels great to be sitting in front of so many thought leaders, visionaries, and yeah, sharing this place with all of you. We at JP Morgan, like if you look at, we are quite excited about blockchain as technology. Now, some of the problems that Dharmesh mentioned, like in terms of volume of transactions, the amount of transactions, JP Morgan clears $5 trillion daily. 33% or 30% of US clearing, USD clearing goes via JP Morgan payment rails. That gives us a significant challenge. So if you look at the amount of friction that has, even within our own environments, when we are doing transactions from, let's say, one region to another region, there are payment delays. So just to give an example, when we were trying to do a transaction from EMEA to APAC, between our own client books, okay, there can be a delay of 6 hours. This primarily because of currency cutoff, like say SWIFT cutoff or whatever clearing cutoffs that you talk of. Now, that's where we get excited about this technology because yeah, potentially it's leading to an era where yeah, you can clear 24/7, okay? Now, the technology has a way to go forward. Yeah, I know, like, so there are a lot of question marks around what's the volume, what's the performance, and how the regulators will behave around all of this. But yeah, having said that, what we see is the potential, okay? And that has led us to kind of focus on the technology. So we started our journey on blockchain in 2015, and we started experimenting with Ethereum, which is one of the proven public blockchain platforms. And what we realized quickly was public blockchain platforms had a couple of challenges which are not suitable for financial industry, right? One, there's no privacy. Like say, the data is visible to everybody, okay? Two, the throughput. Like say, if you look at Ethereum has got a TPS of around 30 or 40, right, transactions per second, which is nowhere close to what we require in a financial industry. That led to kind of developing our own model on privacy. So JP Morgan developed a quorum privacy model, which was, like so we took Ethereum, forked it out, and we created a version of that called as quorum. Now what quorum offers today is enterprise grade privacy. So yeah, I can do a private for transaction. At the same time, in quorum, what we have done is we have replaced the proof of work with more consensus-led algorithms. So today we support Raft, we support Istanbul BFT, okay, as consensus mechanism. And that in a way allows us to get higher block speeds and higher transactions per second. Now, if you look at internally, like say, as an organization-wide, the way we are structured is we have a blockchain center of excellence, which kind of focuses on what needs to be done on the platform and how the platform can be, like say, evolved, okay? This is the team which also focuses on what's happening in the market, right? So yeah, if you look at, it's a beautiful time now where there's a lot of open source development is happening, and yeah, you can learn from others, you can integrate a lot of things that are coming onto your platform, okay? So yeah, this team focuses on how the platform can be evolved and what's the best that we can adopt from what's happening in the open source market. This team also engages with a lot of line of businesses which are there internally to identify use cases, okay? And yeah, how these use cases can be deployed and developed, etc. We actively engage with a lot of fintech companies, and again, we also don't believe that a single platform will solve every problem, right? Like, so we have so many problems on the financial industry side. One size fits all may not work well. So yeah, we look at other platforms as well. So as a part of that, if you look at, we are part of Hyperledger Linux Foundation, and we look at how the platform is evolving, okay? And we are part of Enterprise Ethereum Alliance. We are one of the founding members of Enterprise Ethereum Alliance. So yeah, again, what we are trying to do as a part of Enterprise Ethereum Alliance is how Ethereum can be progressed to meet the enterprise needs, and what are the governance rules around the platform development. So that's what we try to contribute. So a very long answer, okay, for a short question that Dharmesh asked, and I hope I have all of you awake, okay. But yeah, in short, like, so just to summarize, yes, quite excited about the technology. We do see that this will bring in a lot of efficiency, not only in the payment space, but across entire banking spectrum, okay. Obviously, there's a lot of space to be gained, like say, yeah, in terms of performance, in terms of control. But yeah, the pace at which the technology is evolving, that makes us quite optimistic about it. Yeah. Thanks, Dharmesh.
No, thanks, Sai, and I think very well articulated. Sagar, just wanted to understand, I mean, what was the idea behind Ripple being born? I mean, you are a newish fintech today. Yeah. What led to this thought of Ripple and using this technology for cross-border payments?
Sure. So I think, I'll take 2 minutes to explain the history of Ripple, just to be very clear. So the foundations of Ripple actually go back to 2004. And the seed of the idea came from a project called the Ripple Project, which was created by a Canadian engineer called Ryan Fugger. So he was trying to create a peer-to-peer exchange where people could exchange personal credits or IOUs. Now, that was a very neat project and had some excellent elements like the pathfinding algorithm. Now, it gained a lot of traction globally, but it remained a one-man show and could not scale. Fast forward to 2011, a group of 3 scientists and engineers came together. They were closely linked to the Bitcoin movement, but they wanted to create something which was better than Bitcoin blockchain, because they could identify while Bitcoin had its merits, it was a fantastic technology, but it was also wasteful. It was not very efficient, it was not very cheap. So they created this new consensus protocol and also took elements of the Ripple Foundation, namely the pathfinding algo, and created this new XRP ledger, as we call it today. And that was really the origin of this company called Ripple and the idea of Internet of Value. So the vision of Ripple is to create an Internet of Value where value could be moved like we move information today. So like we move information in 2 seconds over emails or WhatsApp messages and so on. We believe that today the cross-border infrastructure is broken. It was built in a very different era for a very different purpose. So for example, SWIFT came into being in 1973 as a replacement to the telex machine, as some of you may recall. But the pain points still remain, and that is what we're trying to address by creating this Internet of Value, which could lead to real-time payments across border at a fraction of cost that basically banks charge today. Now, to create this Internet of Value, we identified 2 key pain points in cross-border payments today. So one was connectivity, and the other was liquidity. So on connectivity, what we did was we created a new protocol called the Interledger Protocol, which took elements of DLT And that really enables banks to settle transactions real time for a fraction of the cost. We then created a software called Xcurrent, which combines a very advanced two-way messaging element with this interledger protocol, and that enables banks to communicate with each other real time and also settle transactions in real time. So the problems that Sai and Dharmesh mentioned earlier about transparency, about error rates, all these problems then get eliminated because of the combination of settlement and two-way messaging. So that really is the secret sauce of the Ripple. And mind you, the Xcurrent software does not use any crypto assets. The key sauce is the DLT-based protocol and also the messaging format. Now, so this already is live. It's not a science experiment. There are about 120 banks globally using it live in production. And we are already seeing an exponential rise in the curve. And by end of this year and next year, you will see a lot more banks joining the network. So this is one part of the solution. Then the problem is around liquidity, which also Dharmesh touched upon. This whole problem around correspondent banking and opening nostro-vostro accounts, which again lead to a lot of costs for banks. So these include the cost of opening and maintaining an account, the cost of compliance, but most importantly, the cost of trapped liquidity. Now, especially in the world we live in with the Basel III regulations, this becomes even more expensive, especially for exotic corridors. Because, so let's say if I want to send money from London to New York, it's a pretty high liquid corridor, so the cost is not that big a problem. But if I want to send money from Cambodia to, let's say, Doha, that becomes a problem because it's not a very liquid corridor. And that is where we believe that a digital asset like XRP could be used by banks and FIs to source liquidity real time. But of course, that is more strategic long-term, and for that, there needs to be more regulatory clarity. So we have started piloting with a bunch of payment providers like Western Union, MoneyGram, Mercury FX, and we are confident that by end of this year and early next year, as there is more regulatory clarity, more and more banks will start adopting or at least trying out using a digital asset to source liquidity. So in a nutshell, what we are trying to do is build an Internet of Value where we can move money like we move information today using these two building blocks and two open source protocols which we have embedded in two softwares that we created.
Thanks, thanks Sagar. Ella, you want to also elaborate on what is Stellar trying to do on blockchain?
Sure, yeah. Actually, part of Sigar's story is related to the Stellar project as well, because our founder, Jeb McCaleb, was also one of the founding member of Ripple. And he left Ripple in 2014 and started Stellar. So what problems we're trying to solve? I think Dharmesh earlier gave a really good summary on some of the issues we've seen in the cross-border payment space, right? Lack of transparency, time, as well as cost. So I think the two panelists touch upon, you know, when you're talking about some of the exotic currencies. For example, 2 weeks ago, I was in Thailand, and right now there are about 5 to 6 million migrant workers working in Thailand, coming from mainly Laos, Cambodia, and Myanmar. And the cost for them to send their money overseas to their family costs around 12 to 16%. So that's extremely high. And those people send money back home on a weekly basis, right? So we're looking at those problems and trying to provide this fundamental open access global protocol to provide interoperabilities among different systems and institutions. What is Stellar's approach to solve this issue? So we're looking back at Bitcoin. At the technical level, we think that Bitcoin really solved two issues. One is it really come up with this really good, smart incentive mechanism to kind of bring together unrelated trustless parties to solve on the same issue and agree on consensus across the network. And then two is really the token distribution issue. So Bitcoin has limited supply, and the increase of Bitcoin, the Bitcoin that you're getting as a miner decreased by half every 4 months. So it ensures the value of this token itself. And you know, it's been a great experiment, and a great idea, and that kind of trigger the thought of leadership in the blockchain. How can you apply blockchain in the real world? But when you actually start to experiment, there are various experiments around doing side chains of Bitcoin, etc., to apply to the real world, and then you realize that it's not really applicable. So Stellar really solved the rest of the issues by, firstly, it's easy for any entity to kind of issue a digitally represented asset on Stellar. So for MTOs or banks, it can be a fiat credit, or, for example, if cow is a really liquid asset in your village, then you can tokenize that cow and trade it on the blockchain. And then two, there's a built-in decentralized exchange on the protocol level, meaning that all these different digital assets that live on the Stellar network can be traded among each other. And it supports path payments, meaning that you identify which token you want, you have, and which token you want your receiver to receive. And then the network will find the best route that give you the best rate. So if I live in Nigeria and I want to send money over to China, in the past, the traditional way might be I have to convert Nigerian naira to USD to Chinese yuan. But right now, you would have people who are providing liquidity between Naira and Lumen, and maybe someone doing Lumen, which is our native asset, and Bitcoin on Stellar, and then someone on the China side providing liquidity between Bitcoin and Chinese yuan, and then the path is found. Right, so that provides more optionalities for different participants to do cross-asset transactions. And what's been very interesting is there are more and more digitally represented assets that start to look into the DLT solution, right? So now you've seen digitally represented carbon credits, company bonds, or even private equity shares. And I think this provides a really powerful tool for them to reach more liquidity around the world and reach more participants. So this is kind of how Stellar are looking at the situation, and obviously scalability is also something super critical if you want to build this universal payment infrastructure, and we can get into some of the details on how Stellar are looking at the scalability issue.
Thanks, Ella. I mean, you've given a lot of areas where blockchain can be used. What are the real use cases today? I mean, we all know the technology, we all know it is evolving, and there are areas where it can be used. But on the payment side, are there real use cases which JP Morgan has seen, and what are the initial successes there?
Yeah. So for the 2 years when we were having this journey on blockchain, so a lot of times, a lot of teams used to come to us and say, yeah, this is the use case we wanted to do. Like say, yeah, everything and anything, blockchain is the solution. So yeah, blockchain is not going to solve world peace, world hunger, okay. But yeah, there are certain valid use cases which excite us. So we are currently working with several use cases, but yeah, a couple of them which makes us super excited is, one is interbank information network, which JP Morgan piloted last year with a couple of other banks, ANG and Royal Bank of Canada. Now what interbank information network tries to do is remove friction in payment processing. So yeah, the payment is getting processed on the SWIFT rails or the payment rails, right? But yeah, let's assume that I have got a payment to make from let's say a remitter to a beneficiary, which is going via a couple of intermediary banks, okay? Now, if the second intermediary bank has a KYC failure or a AML failure on that particular payment request, there is no standard process today, like say in terms of how we go about resolving it. It's a fairly regular phenomena, like say it happens almost like say every day you will find some transactions which are failing because of this, but yeah, no standard process. Now, what the bankers typically do is they resort to kind of quite manual process, like say, yeah, either I call up, I send a mail, or I fax and get that information, and once I have got that, I'll say, yeah, this payment is passed or this payment is blocked, right? When we did some analysis, what we observed was this process can delay a payment by 2 to 16 days. In extreme cases, it was delaying a payment by 16 days. That was something unimaginable, right? Now, what IIN is trying to do is create this network of the intermediary banks, okay? wherein, yeah, if you get it's more similar to a information info share network, where, yeah, I can, if I get struck with such an issue, I can raise a query on the blockchain, and yeah, the respective bank is kind of responding to it quickly. A couple of things that you achieve with that: one, everything is audited, everything is on the chain, and you have right reference for the right data that you are asking. Second, yeah, as this network grows, okay, you can as well do so. For example, one of the failure scenarios in a payment processing is the account is blocked on the other end or the account is closed, right? Now, can I check this upfront before I initiate a payment? Now, yeah, if this network grows tomorrow, like say that's potentially another use case that you can look at, right? So this year we are looking at expanding this network. So we are currently in pilot phase with 3 banks. We are looking at adding a few more banks in the region by end of this year. So yeah, we expect that, yeah, this network grows and helps us more than the efficiency part. It's also helping the banks to adopt blockchain as a technology. So that's what something excites us. The other use case is Dromeus, which is corporate peer-to-peer lending. Okay. Now, most of the blockchain use cases, what you would have seen is kind of a lift and shift from what is happening today onto the blockchain with some efficiencies involved. But yeah, what Dromeus is trying to do is more look at a different market segment altogether. Okay, so this is a corporate peer-to-peer lending market space where a issuer can, like say, trade a digital asset. Okay, with the buyer, and yeah, that way there's a lending market that gets created, and a corporate can lend to another corporate, and that way, yeah, they can manage their liquidity better. Yeah, so these are a couple of use cases which kind of quite excite us. JP Morgan has been part of Project Ubin, like say in MAS, and that's another project which is kind of quite exciting because, yeah, you are looking at how you are essentially, if you look at Project Ubin Phase 2, the title of the report was, yeah, reimagining RTGS, and truly so, like so where you are looking at how you can redo a lot of traditional high-value payments using a blockchain infrastructure. So yeah, these are some of the use cases which excite us.
Thanks. So Ella, you want to share what are the use cases which Stella is trying to use?
Sure, yeah.
And what are the initial learnings there?
So in the cross-border payment space, we're very focused on working with the MTOs. If you look at the hierarchy of different types of financial institutions, you have the tier 1 banks who are direct participants of the SWIFT system. You have the tier 2 and tier 3 bank. And then you have the MTOs. So they're kind of low in the stack, and they're feeling a lot of the squeeze. But they're the one that serve the either unbanked or underbanked population and potentially provides better rates and better services to them. So we find, we were talking to a lot of different variety of players, but we find that the MTOs are really the sweet spot. They also are more acceptable for the idea of cryptocurrency, using cryptocurrency as a bridge currency. So currently, we already have live corridors, remittance corridors across Africa, Europe, and Southeast Asia, and we expect to grow that network of MTOs a lot more by the end of this year and reach more parts of the world. And those are MTOs that integrate onto the Stellar public chain, and the majority of them are using Lumen, our native asset, as a bridge currency. So what they find that is really appealing to them is that, one, you as an MTO, you don't really have a common system like banks do for messaging, for compliance check, to keep your transaction ledger, right? So we provide that common tool. You know, if I'm an MTO in Singapore, in the past, if I want to expand to more countries and add on more corridors, I would need to, one, first do my own research and find who would be my potential partners in that region. And then after reaching an agreement, I would need to do technical integrations with them. So that's like, with different countries that I want to go to, that adds up, right, as my technical burden. But once I've done one single Stellar integration, I'm now on this open API platform and have the direct peer-to-peer relationship on the technical level with any of the participants participating Anchor MTOs on the Stellar network. So that's what they find really appealing. And then two is the on-chain settlement piece. Currently, MTOs, they would need to park a lot of floats in those sending destination countries that they would have. And for them, it's a lot of operational cost, and a lot of them don't really want to do that. They're not specializing in it. So what Stellar can provide is you have participants, we call them market makers, who are specialized in trading different assets, whether it's fiat to fiat like traditional FX trader, or you have people who are specializing trading crypto assets with fiat, right? Or even other exotic digitally represented assets. So you have those people kind of step in and provide that liquidity on your behalf. And that's what also what the MTO partners find it really attractive. So that's on the success stories on the MTO cross-border remittance piece. And then the second work stream that we're working on is really represent Stellar as a platform for blockchain projects, token projects to launch your token on. So when we are talking about ICOs, most projects are kind of choosing Ethereum as the default choice. However, for a lot of tokens who are using their token as a payments mechanism, then Stellar is a better choice. And if you're interested, we can talk more about what are the benefits of using Stellar as a fundamental protocol. And then we also seen an increasing amount of companies who are interested to tokenize real-world assets, such as, as I mentioned earlier, company shares, carbon credits. There are 3 carbon credits related projects that are launched on Stellar, and more kind of established companies are interested and looking into this space. So this is also something we see a lot of traction, and we expect those two worlds kind of converge a little bit, and for FIs who are in the first category, a few of them right now are interested to provide the fiat solution for companies and projects are falling to the second category and really set themselves up technically to serve the up-and-coming token economy.
Thanks, Ella. Sagar, I think, so Ripple has been working with a lot of banks on use cases. I have also known that there are few public launches also which Ripple has done. Can you share some of the use cases which are actually live today and what are the successes there?
Sure. So first of all, I would like to stress on the point that Ripple is focused only on cross-border payments. That is our only focus for now. And I would like to give 2 examples, one on the retail side, the other on the corporate payment side. So there are about 47 Thai nationals working in Japan today. And until very recently, they would send money back home, and that would take them about 2 to 3 days and cost them up to 6 to 8% of the transaction, of the entire transaction. This had more macroeconomic implications because apart from the cost and the speed, there was also a lack of transparency. So some of the issues that you covered initially. And so that is when we partnered with, SBI Remit and Siam Commercial Bank in Thailand. So they started using the Ripple Xcurrent software, and now those Thai nationals working in Japan can send money back home in a matter of 3 seconds flat. So that is one use case. The other use case on the corporate side is there is this big petrochemical Southeast Asian company. They were having a tough time sending money to their foreign customers because, again, exactly for the same reasons, they would take 2 to 3 days to send money, extremely expensive, and there was no transparency on how much money will actually be received given the costs levied by the intermediary banks. So that is where Krungsri Bank stepped in and they started using the Ripple Xcurrent software, and now that petrochemical company is sending money real time across borders, thus also impacting their bottom line in a way because the velocity of money then starts increasing. There's also a bunch of banks in Middle East who have started using Xcurrent and have signed on the RippleNet. And for them, it's a big value add because UAE and other Middle East countries, as you may be aware, are big remittance corridors. And for citizens, so especially for blue-collared workers from Pakistan, Bangladesh, India, working in those Middle East countries, sending money back home is not a matter of convenience. It's a matter of life and death. and they basically get paid like 100 rupees or 200 rupees, and they will send almost 50% of those payments back home. So those payments have to be sent home real time. Now, a lot of payment providers and banks are trying to do this already, but they are doing this by individual API connections with banks in these countries. So for example, a couple of banks in Middle East we spoke to had almost 100 API integrations because of those reasons. So using Ripple software, they can still do the real-time payments, but they have to manage only one API connection through the Xcurrent. So these are some of the use cases on the where banks are using Xcurrent. And again, I would like to stress that Xcurrent does not use any digital asset. There are examples of payment providers using XRP, the digital asset, as a bridge currency, but that is again not live in production. I think it's still early days. We need more regulatory clarity, but we are confident by end of this year, we will have at least a couple of banks or payment providers going live. How the model works is very similar to what Ella mentioned, so using XRP, the digital asset, as a bridge currency, so that way banks and payment providers don't have to rely on correspondent banks or have to, they can then skip the whole trap liquidity bit, especially in exotic corridors. But again, I would like to stress that for that, before banks would adopt digital assets as bridge currency, I think we need more regulatory clarity, but we are now seeing regulations coming up in certain countries, especially in emerging markets, and hopefully by end of this year or early next, we will see more adoption of digital assets as a bridge currency.
Sagar, apart from TAT, are there any benefits which you've seen? So on both your use cases, it is the turnaround time which has actually come down.
Yeah.
But does it also reduce the cost today for
Absolutely.
the person?
So it reduces the cost by a long shot. The only thing is Ripple is only a software vendor, so it's up to the bank to transfer that cost to the end consumer. But banks have told us that it reduces cost by up to as high as 60%. So there definitely is a value add for banks.
Okay. The other point which you rightly touched upon is the where the regulators have to also support a cryptocurrency or some of this. So there are two key points for any of these use cases to be successful. One is this is actually interaction between different financial institutions. So is there a common rule book which can be created? Is there a common logic, a set of rules which both institutions agree upon?
Sure.
And the second is the regulatory clarity. I mean, there are different banks or different institutions in different countries, right? So you have a regulator in a country A which has a different regulation, regulator in a country B which has a different view on blockchain. So how do you handle that? You speak to a lot of regulators.
Sure. So that's actually an excellent question and right up my alley. So on the governance side, I think when Ripple started working with these banks and these cross-border payments, I think everybody was super happy with the results they were seeing. But what was missing was the whole governance piece. So in the decentralized world today, there was no governance rule book which banks could then comply with. So what Ripple did was actually we created a rule book from scratch. So we worked with top 6 banks globally and also hired a former attorney from the Federal Reserve and then created a rule book from scratch which all our RippleNet members are supposed to comply with. And this rule book basically touches upon topics like dispute resolution, messaging format, delays, and all the classic things that you would expect in a centralized world. So that is actually one of the value adds for Ripple, which at least in my limited knowledge, nobody else is doing. So that really differentiates Ripple from some of the other companies out there. And I think more and more as we see adoption of DLT and blockchain, I think governance will play a very important role. So I think startups, banks, all of them will have to start thinking about how do you create a governance framework for DLT's mass adoption. On the regulatory side, so I think there are 2 elements to it. One, DLT and blockchain, the technology, and then the crypto assets. I think now we are in a stage where central banks and regulators across the globe are very confident and familiar with blockchain and DLT. So it's just a matter of collaborating with them, sitting them, educating them, and explaining them what exactly you are trying to do and what are the risks and how you're mitigating those risks. So when actually the Bitcoin movement started, there was a view that central banks will cease to exist, banks will cease to exist, and Ripple that time actually took a very contrarian view of things, and we said, look, we will work with banks and central banks and work in a regulatory space rather than trying to work outside of that space. And which is why, to be honest, Ripple employs someone like me so that we can work and engage with central banks and policymakers. So I, for example, have already engaged with around 30 plus central banks in Middle East and Asia Pacific, working on the regulatory side, policy frameworks, and then educating them, collaborating them wherever required. What we are also seeing, especially in APAC, a lot of countries created this concept of sandbox. So Ripple initially was working with banks within the sandbox, but once the policymakers were confident and could see the value add, basically all the banks exited from the sandbox. So that is one way of regulating this market. But I think more and more, even the global bodies, so BIS, IOSCO, FSB, have clearly said recently that they don't see many risks with DLT, but whatever the risks there are, they could be easily managed. And banks will continue to own customer relationships. So at least in our model, banks are still responsible for AML KYC checks, and Ripple only complies with the internal software vendor guidelines that they might have. Now, the crypto asset side, digital assets, is a whole different game. And there also, to be very honest, we are seeing some positive sentiments coming out from global bodies. So recently the G20 in their March conference, and also very recently came up with some very positive comments. The IMF came up with some positive comments, and we are now seeing more and more countries, especially in emerging markets, come up with regulatory frameworks that could mitigate the risks, yet not stifling innovation as far as crypto assets are concerned. So for example, Thailand just came up with a framework. Japan was one of the few countries who took the lead and came up with a licensing framework for exchanges. Abu Dhabi recently came up with a framework which we believe is the way going forward. So there are now countries who are realizing the potential of crypto assets and coming up with frameworks to regulate this market. And that to me really is, so by the way, we are also expecting that by the end of this G20 summit this year, a sort of a global framework will be proposed, which then countries will have to comply with. And that to me would be the watershed moment in this market. So something very similar to what happened in 2008-9 Pittsburgh summit, where the G20 came up with guidelines for clearinghouses, CCPs. It was a tough challenge, but they did. And then countries came up with their own frameworks. And that was a watershed moment in the history of financial services. And if the G20 could come up with a framework, global framework, I believe that would really lead to mass adoption of crypto assets and more enterprise use cases of crypto assets going forward.
Great, thanks. Ella, just to check, similar question for you. You also deal with a lot of regulators and institutions globally. So what are your views? And there is a lot of spectrum from decentralization to centralization across various distributed technology, ledger technology. So what is the optimal approach you see there?
Sure. So let me answer the later question first. So decentralization versus centralization. I think if you're talking to, this is a different crowd, but if you go to a Bitcoin meetup, maybe me and Sega would be under attack by those Bitcoin maxims saying that we're not decentralized enough, right? So there are two schools of thoughts. One is it has to be completely trustless. The consensus mechanism that being used by the proof of work and proof of stake technologies such as Bitcoin, Ethereum, people claim that it's trustless and it's secure. But if you're really looking at it, like for example, Bitcoin, the largest POS protocol out there, I think either 5 or 6 mining pool controls about 80% of the mining power of Bitcoin, right? Do you call that completely decentralized? And there's also security issues because POS are subject to the 51% attack, right? And we've seen recently some of the smaller scale POS-based protocols have been subject to the 51% attack and causing double spend issues. And if you are a bank or an MTO that issue a fiat asset on those blockchain, that means all of a sudden your digital dollar exists on 2 different protocols, right? Like, how do you feel about that? So, and then not to mention scalabilities, which Sai touched upon earlier. So, and then there's another school of thoughts. For example, I'm currently based in China, and for institutions in China, Private chain, permission chain is the dominant blockchain research topics that they're interested in and implementing. With permissioned blockchain solution, you would have a centralized authority that approves who are the validators and have the validator list. So you're going back to this controlled environment. So at Stellar, we really believe that we don't want to tear down what's already exist in the real world. We have excellent financial infrastructures. Different banks and FIs have existing relationship with each other, so we want to utilize that. And then two, we want to have this open access network that any participants can join and operate. So we really use a federated version of BFT called Stellar Consensus Protocol, and this really allows participants to freely join this network and run your own validator. But you can also choose who are the other validators that you can trust. So, for example, if I'm Bank of America and I already have existing relationship with, Standard Chartered, MoneyGram, and DBS, I already have existing commercial relationship with them. So I would choose them as my validators on the Stellar network, and that will be my quorum slice. And you, as Standard Chartered, I have a different set of commercial relationships with other FIs. And that would be my quorum slice on Stellar. And I'm the one that's overlapping, that connect the two quorum slices. So as long as there's enough overlap among all these quorum slices on the network achieve consensus. So this really allows flexible trust. And also it helps with the scalability, right? So currently Stellar operates around, the throughput is around 1,000 transactions per second, and the ledger close every 3 to 5 seconds. So this is how we're looking at, the balance between decentralization and centralization. And then going back to your first question on the regulation piece, we also travels a lot and talking to different central banks around the world, and I think what really needs to be done by the whole industry together is educate them on what this technology is capable of doing. And separate different use cases, right? The crypto aspect, cryptocurrency speculation aspect has no relationship to do with using crypto in the cross-border payment space. And even if you're taking the cryptocurrency aspect out the cross-border payments use case, it is still valid. It still have value propositions that banks and MTOs find valuable. So I think educating the regulators is a very key part of our job as a whole industry to come together.
Sai, what is the banker's view here? I mean, how do you deal with technologies which are not approved by regulators? And
very difficult question, let's say, because how much regulated the banks are, right? Yeah, I'm waiting for Sagar and Ella to give the solution so that we can adopt. Right? Okay. Yeah, having said that, so if you look at, like Sagar said, like say Ripple is focusing on cross-border, okay? And if you, as a bank, we deal both on domestic as well as cross-border payments. And a lot of domestic payments go through the central bank. Now, purely from a rule book or guideline point of view, like say if you look at, it's something that has to be agreed in the region for the domestic payments in the region by the consortium of banks which are participating in that. And yeah, once that gets widely adopted, yeah, that becomes the norm. Now what's heartening over here is to see the role of regulators. So for example, if you look at last few months, okay, so many central banks have tried out distributed ledger as a platform for reimagining their high-value payments. So recently, like say South African Central Bank, they completed Project Coca. We had Project Ubin in Singapore. I know that Bank of Japan and ECB did an exercise last year. Okay, now all these things are pretty good because yeah, what it proves is yes, the technology can handle. Like, so for example, 360,000 target 2 transactions in a day. Yes, it was possible in Project Stella. Project Ubin, 3 different distributed ledger platforms, and all could solve the problem that was given. Okay, and Project Khoka has done it on Quorum. Now, technology-wise, it's ready. But yeah, what's required is more around the controls. Like say, yeah, what's the dispute resolution mechanism even for these payments? What's the like say SLA? We talk of 24/7. So how do you do liquidity management in case of 24/7? So there's an overnight rate that I get when I put my money with the central bank. So what happens to that? Now, how do I handle that liquidity? Like say, what's the additional liquidity that I can inject, right? These are the things that kind of worry me as a banker, right? But yeah, again, I'm quite heartened to see the initiatives that the regulators are taking there. Again, the views from regulators are different. So for example, when we spoke with, like say, MAS here, MAS essentially wanted to control the network and who can participate in the network, right? Like say, exit criteria, entry criteria, and overall monitoring is what MAS wanted to control as a part of the revamped architecture. MAS never wanted to participate in the settlement side of it, where yeah, the banks can settle peer-to-peer. But yeah, that may be completely different with another bank. Like say if I go to, let's say, another country, the regulator might say, yeah, I want to be part of each and every transaction that is happening. Now, these are the points which needs to be kind of taken, debated, and yeah, probably I hope some consensus arrives over there for the technology to be widely adopted in the wider financial industry.
No, fair point. So also, whatever use cases I think we discussed are still at a very smaller scale considering the larger size of volumes which we see, specifically in the payments size. At any point of time, do you think a bulk of the payments processing globally would happen through blockchain technology? Is that a dream or a reality, or is there a possibility there?
Yeah, that's a great question, Dharmesh. So yeah, if you look at, I'll answer it in 2 parts. One, obviously the progress at which the technology, the pace at which the technology is progressing, okay? A year and a half back when we tried to integrate zero knowledge proofs onto Quorum, generating a single zero knowledge proof used to take around 45 minutes. Okay, now, yeah, that's not viable, right? Okay, but yeah, when we did Project Ubin, we could generate it in 3 seconds, okay? Now, that's the pace at which technology is progressing, right? Now, what we see is continuously the platforms getting enhanced, refined, and yeah, that means the TPS is increasing all the time, right? Yes, Ethereum has a TPS of 40, Bitcoin has a TPS of 4 or 6 or whatever number, but yeah, these TPS numbers are increasing with the amount of research that's happening and the amount of open source development that's happening. Even in the current state, if you look at a lot of high volume transactions, like 360,000 target 2 transactions, that can be easily handled by any of the platforms that are there, okay? But yeah, can I do a ATM transaction? Visa claims that they have 56,000 transactions per second. The answer is no. We are yet to go to that level where yeah, we can handle large volumes. But yeah, the pace of technology means probably in next few years, the technology will be at a stage where potentially I can route majority of the traffic through the platforms.
Great. Sagar, what are your views? And do you think one accident here, one fraud, and we are back to square? I mean, the technology is again question.
I don't think so. I think regulators, policymakers have reached a stage of maturity where that should not happen, and I'm pretty sure that will not happen. Coming to your question around bulk or majority of the payments going through DLT, I think the answer lies in who will control this space. In my view, coming from the banking industry initially, I think banks are not going anywhere. Banks will continue to own this space, cross-border payments. And it's important what banks decide. I think right now what's happening is, as Sai mentioned, banks are hedging their bets, and I think even in the previous discussion, somebody used the word betting on horses. And so there are multiple partnerships that banks are now doing. And I think end of the day, they are all capitalists, right? So they will basically go with the technology or the vendor where they see maximum value add and maximum cost benefits. I am of the belief that there is no doubt in anyone's mind today that real-time payments is required and is possible. It's just a matter of reaching the scale and selecting the right technology or the vendor, and that I think banks will decide. So whichever technology or vendor the banks decide to go with, will become a norm, like it happened 30, 40 years ago with SWIFT. Now, that could happen again. Now, there is obviously room for multiple players, but it will depend on, again, what banks select. There is no doubt that there is an extreme need for real-time payments, and DLT and blockchain does provide that. But again, the key from a vendor perspective is to keep customizing the technology and not using the one-size-fits-all approach, which is what we did with Ripple. When we started out, we were using the generic public blockchain, XRP ledger, to solve this problem. Banks said, well, look, this is great, but doesn't work for us because forget about TPS. The biggest problem for them was data privacy. So when Bank A and Bank B are dealing with each other, they don't want Bank C to see what they are doing. So which is why we went to the drawing board and said, look, we have to start from scratch, and created this new protocol, Interledger Protocol, which was a very customized form of elements of a DLT, and now banks are very comfortable using it. Now, yes, the argument is that we are still only 120, 130 odd banks, and but I'm very sure that once the network effects kick in, which by the way are happening, we will see the curve go exponential, and there'll be more mass adoption, thus creation of this new Internet of Value that I was talking about.
Sure, thanks. Ella, your quick views on, do you think this is a scalable technology? Or this is just a phase and you will have new technologies coming in?
Yeah, sure. So I think let's put some figures into perspective. I think currently SWIFT system is processing around 300 transactions per second, and for that, throughput, I think both Stellar and Ripple will be, that capacity we're very much comfortable supporting with. So Visa process around 3,000 transactions per second. And Alipay, their peak TPS on Singles Day shopping craze is around 200,000 TPS. And that's also why at Alibaba, one of the key metrics they're looking at blockchain is throughput to support that kind of performance. And now we're only talking about fiat payments, right? And now we're seeing like machine-to-machine micropayments with the emergence of token economy. We've seen a lot of different projects and companies are creating their own token payments mechanism, right? So I think it's not going to be just the size, the transaction of payments is not just going to be limited on the fiat side, but you will see more and more payments, non-fiat payments happening, not long in the future. So how do we support that? Stellar, we're trying to build this global payments infrastructure, right? That means to support payments that being transacted between you and me using fiat or non-fiat or any kind of token. So on a technical level, scalability is the #1 thing we care about. Currently, we're doing fine. We can support the existing ecosystem, but if we're talking about having like billions of tokens being transacted on the network, we need to find some other solution. So our thinking around that is we are coming up with our own implementation of the Lightning Network, and we will have the final version coming out by the end of this year. So what Lightning Network can support is, one, it really will help you with the scalability issue, and two, it support privacy. If you are two banks, two participants on the public chain, Lightning Network really create this private channel between the two parties that you don't have to, any of your information will be kept at the private channel. Privacy, and then three, it also supports cross-chain transactions. So if I want to do let's say a transaction in the Stellar network, and I want to have this interoperabilities to XRP net or EOS in the future, right? Lightning supports that. So this is our #1 priority for this year in terms of the technical implementation of Lightning Network to support scalability.
Thank you. I think we are running short of time, and before I just throw open the floor for questions, I'll quickly summarize what the panel here debated and discussed. I think we have a clear consensus that the technology is here to stay. Payments would gradually change over the years using blockchain, and we will see a lot of more migration happening on the blockchain platform, and in few years down the line, hopefully a lot of payments transactions would happen real time using blockchain technology. From a customer's point of view, this would mean faster payments, much more transparency, much more secure payments going, because it's a real time payment, which end of the day is the vision here. From a bank's and a financial institution's point of view, it also helps in managing liquidity much better, because you're not planning for something which you don't know, because if the payments go real time, you can plan your liquidity also real time. It also leads to a lot of better reporting and compliance, and there is a trail in the technology there. So it also helps in a lot of reporting, fraud detection, and compliance. So that's the panel view here, and I would like to throw upon the panel for questions. Anybody has any questions for the panel?
Hi. Thanks a lot, by the way, to the panelists. That was a great discussion. I just had a quick comment, and then I'll follow up with a question. My comment was on the traditional rails, and I think there's been conversation around that. So SWIFT is the traditional rails for correspondent banking today, and we see that over the last 40 years, of course, it's replaced Telex, and today it's connecting about 11,000 institutions globally, and every single message between two banks globally has been taking about 2 to 3 seconds for the last 30 years. Yeah. So when it comes to speed and the question of timing, it's not really the network or technology which has been the problem. And I think if I look at SWIFT GPI, which was a program launched last year, the intention of that was to look at what is the friction in the system, and I think there was good discussion around that. What's the friction in the system that needs to be solved to give the end customer a better experience in the cross-border payment space? Now, given that SWIFT is connecting 11,000 institutions, these messages are going in 2 to 3 seconds. Every single message actually costs a few cents from the SWIFT perspective to the banks. And the world's GDP is getting processed 2 to 3 days on this network today, right? Now, the finding was that the friction is lying within the processes of, whether it's KYC or AML or applications across the way, across intermediary banks. Now, my question is, when we look at these traditional rails, today, transactions are taking not days. Some of these transactions have moved on to be processed and end credits happening within less than 10 seconds. There is real-time tracking now with GPI, which gives a view in real time of where transactions are with intermediary banks or end banks, et cetera. The question of transparency of fees, for example, is also addressed in real time, availability of information. And then APIs are being used to actually expose services, and SWIFT is working with fintechs to actually create new overlay services, which can add additional services for corporates and retail individuals making remittances. My question is, with all this happening, and also a lot of focus by the traditional rails on DLT on the payment side, what is this considered as? Is it an opportunity for a pure DLT-based institution to work with traditional rails, which are opening up, providing access to fintechs working together and collaborating? Or is there, is there more friction in the system? So that's my question. Is it collaboration? If yes, what would be the opportunity?
Sagar, you want to answer that?
Yeah, I think collaboration is definitely happening, and collaboration will always be the key. I think to the point around SWIFT, and I can talk about Ripple, I think the one value add, so SWIFT is a messaging platform, right? Settlement is still being done by the banks today. I think the biggest differentiator or value add that Ripple offer is the connection between settlements and messaging. So when we started off, we are actually only offering settlements, but then banks came up to us and said, hey, can you also give us messaging? So we said, okay, why don't you use SWIFT for messaging and use our ILP for settlements? So they said, no, we would want a software which combines both. So that is why we created this new messaging software, which essentially Even before Swift GPI came into being, there was inbuilt tracking, and it was not really a one-way communication. It was like what we call it is a payment object. It's like a Google Doc where both parties can edit the document in one go. So we believe that it's advanced version of the messaging format. And the biggest differentiator, as I said earlier, was the connectivity with the settlements piece. So this ILP basically synchronizes the debits and credits in both the books instantaneously. So in a matter of microseconds, which is what the key differentiator is. And in terms of the compliance checks and the FX costs coming through, that is very similar to what Swift GPI is doing, but again, that happens even before the payments has been initiated. The second thing is that in Ripple, banks are not doing batch processing. So that happens on a per transaction basis, real time, right there when the customer request goes through. And even before the payment has been initiated, the customer will know exactly how much money will reach, exactly how much FX cost would be levied, and exactly how much time will the transaction take. So that's my take on that. So I think both Swift GPI and Ripple are trying to solve the business friction problem, as you mentioned. But I think the differentiation here is how we are doing it. So Ripple is trying to solve that problem using technology through ILP. And perhaps Swift GPI could be using other means. So I'm sure they're not using DLT, but I think from what I understand, they're probably using SLAs, but again, I'm not an expert there. But Ripple is using technology to solve the business friction problem. Swift could be using other mechanisms, but at least we have an agreement here that there are business friction problems. And again, as I said earlier, it's up to the banks. So most of the banks using Ripple are also using Swift GPI, but eventually they will decide whether they want to stick with both or one player. So that's, again, the jury is out on that one. So that would be my 2 cents. But again, the key here is collaboration between the incumbents and the fintech players. And that is really the core belief at Ripple as well.
Thanks. Any questions? Any more questions?
Can I ask one more?
Yeah.
So I just wanted a bit more clarity regarding the XRP, which XRapid uses, and to an extent even on the Lumen as well. So the way Ms. Sagar and Ella had described it, it was sort of like a bridge currency, right, in using cross-border payments. So is there any utility for normal people to actually hold these coins or tokens, or is it just going to be forever based on for your utility that you described here?
So I'll answer to that. So I need to mention here that XRP Ledger and XRP are open softwares. Anyone can use it for any utility. Ripple, the company, uses XRP for a very specific cross-border liquidity use case. You and I can do whatever we want to do with it because it is open source, freely available. So we have recently started this venture called Spring Ventures, where we are encouraging entrepreneurs to use XRP Ledger and XRP for their own initiatives. Other people have been doing other stuff on the XRP Ledger. So you and I, the retail customers, are free to do what they want to do, wherever they see, because there are some characteristics of the XRP Ledger. So TPS, speed, cost, these are one of the best in the industry compared to other crypto assets. So retail investors can do whatever they want to, but Ripple, the company, uses it for a very specific use case. Does that answer your question, or?
Yeah, similar with Stellar, the MTOs and the FIs that are using Stellar as a bridge currency, or market makers who are providing that liquidity, they're using it to facilitate cross-asset transactions. But nowadays we've seen the retail payment space are coming up in certain jurisdictions and countries. For example, in Japan now you can use Bitcoin to pay at chain stores like Big Camera, right? So that can be a potential use for XRP or a Stellar Lumen as well.
So we have time for one last question.
So question to Sai, JP Morgan, right? Yep. So first of all, I would like to thank you so much because I'm currently using your Quorum platform as well. It's a great one, right? Yeah. Okay, so you're talking about the blockchain center of excellence at the JP Morgan, and I think a number of banks here try to structure a very good blockchain organization or something like that. So besides or except the developer that we need to build, is there any other important role or how we should structure the blockchain center of excellence, something like that? What is your recommendation?
Sorry, like say if I get that question right, are there any rules around which
No.
platform or
No, talking about the structure, the organization structures.
organization structure?
Yes.
Okay.
Besides the developer, is there any other role that is required, or what you suggest how we can build a good blockchain lab, something like that?
I think, yeah, frankly, I can talk about what has worked for us, okay, but yeah, it can be vastly different when you go to a different organization. So the way, because of, like say, if you look at, we operate from so many countries, okay, and it's not possible to train so many people on blockchain in one go. The approach that worked best for us was to have a blockchain center of excellence, okay, which is then kind of liaising with all the line of businesses that we have, okay. And so that way, this was kind of more of a ripple effect, okay, where yeah, we are kind of, we started working as central team, and then we started interacting with people who kind of understand the technology a bit, trained them, got the use cases, discussed with them, and then worked that through, okay. So that has worked out well for us. So yeah, that way what we are seeing today is kind of, we have several teams who have got blockchain experts, and yeah, they can do the initial analysis in terms of whether it's a valid blockchain use case or not, okay? But yeah, again, as I said, like, so this is something that has worked for us. If I look at, for example, another model, okay? So for example, if it is, let's say, yeah, if I'm APAC-centric, okay? I can probably have my entire team trained and everybody knows what's happening, right? So yeah, again, I would say it exactly depends on the kind of structure of organization. But definitely having a center of excellence helped us in focusing the effort. So today we know what we want to do, and so for example, yeah, as a center of excellence, we do two things. One, how do we interact with, how do we develop our own platform, okay? And second, how do we look at industry and what we can take from industry? And the third part, obviously, is the use cases part of it. So in a way, yeah, having that center of excellence helped us focus our efforts and kind of create dedicated teams which will look after each of these activities.
Thank you. I think we overshoot the time by 5 minutes. So the panel is there, and we can have a discussion after the, if anybody has any more questions. I would like to thank Ella, Sai, and Sagar for the valuable insights. And on behalf of the panel, we would like to thank the BFC Forum for organizing this conference and calling us here. Thank you very much.